Ever look at your paycheck and wonder where all your money went? In this video, I'll break down your paycheck step by step, covering gross pay, net pay, taxes, deductions, and even benefits, in the simplest way possible. If you've ever felt confused by your pay stub, this will make it crystal clear. Be sure to like this video and subscribe for more easy money breakdowns. When you get your paycheck, it's easy to feel confused about where your money went. You may have worked hard for 40 hours a week expecting a certain number, but when payday arrives, the final amount is much smaller than you imagined. This is where understanding your paycheck becomes so important. If you don't know what's being taken out or why, it can feel like your employer or the government is just cutting into your income without explanation. But the truth is, your paycheck is simply broken into parts: gross pay, deductions, benefits, and net pay. Once you understand each part, you'll have control over your finances, and you won't feel surprised when your take-home pay is less than your hourly or salary rate would suggest. To make this simple, let's break down your paycheck step by step. We'll count down from 10 to 1, covering everything from gross income to net pay, including taxes, retirement contributions, and benefits. By the end, you'll understand your paycheck in plain language and feel confident about where your money is going. Point 10. Start with gross pay. The very first number you should look at is your gross pay. This is the amount you earn before anything is taken out. If you're paid hourly, your gross pay is your hourly rate multiplied by the hours you worked. For example, if you make $20 an hour and worked 40 hours, your gross pay is $800. If you're on a salary, your gross pay is your annual salary divided by the number of pay periods in the year. Gross pay is always the starting point. It shows the total value of your labor before deductions and benefits. Point 9. Understand federal income tax withholding. One of the biggest reasons your paycheck shrinks is federal income tax. This is money the government collects from you throughout the year based on how much you earn. The exact amount taken out depends on your income level, your tax filing status, single, married, head of household, and the information you provided on your W-4 form when you started your job. Employers use IRS tax tables to calculate how much to withhold each paycheck. This money is sent to the government on your behalf so that when tax season comes, you've already paid most of what you owe. Sometimes, if too much is withheld, you'll get a refund. If too little is withheld, you might owe extra. Point 8. Look at state and local taxes. If they apply, not everyone pays state or local income tax. But if you live in a state like California, New York, or Illinois, you'll see another deduction for state taxes. These work in a similar way to federal income tax, but are used to fund state programs like schools, infrastructure, and healthcare. In some cities, like New York City, you may also see a local tax deducted from your paycheck. On the other hand, if you live in states like Texas or Florida, you won't see this deduction because they don't charge state income tax. Point 7. Understand Social Security contributions. Another line on your paycheck is Social Security tax, sometimes labeled as FICA, Federal Insurance Contributions Act. This is a program that provides income for retirees, people with disabilities, and survivors of workers who have passed away. You and your employer both contribute to Social Security. Right now, the employee contribution is 6.2% of your wages up to a certain limit, and your employer matches that amount. It may not seem like much, but over time these contributions help secure your future benefits once you retire. Point 6. Understand Medicare contributions alongside Social Security. You'll also see a deduction for Medicare. This is also under FICA. Medicare is the federal health insurance program for people over 65 and for certain younger people with disabilities. The current Medicare tax rate is 1.45% of your wages, and your employer also pays the same amount. If you earn a high income, you may see an additional Medicare tax applied to your paycheck. Just like Social Security, this isn't money you'll see right now. It's funding a program you may benefit from later in life. Point 5. Take note of pre-tax benefits. Many employers offer benefits such as health insurance, dental insurance, vision insurance, or retirement contributions. Often, the money for these benefits is deducted before taxes are calculated, which lowers your taxable income. For example, if you earn $3,000 a month and pay $200 for health insurance, your taxable income drops to $2,800. meaning you'll owe less in taxes. These pre-tax benefits are valuable because they save you money while still giving you access to things like healthcare or retirement accounts. Point 4. Look for retirement contributions. If you're contributing to a 401k or another employer-sponsored retirement plan, you'll see deductions for this too. Many employers offer to match part of your contributions, which is essentially free money for your future. For example, if you contribute 5% of your paycheck to your 401k, your employer might match with another 5%. These contributions reduce your take-home pay now but build wealth for your retirement. Understanding how much you're contributing and how much your employer is matching is crucial for your long-term financial planning. Point 3. Don't forget other deductions. Your paycheck may also include other deductions depending on your situation. This could be union dues, wage garnishments, student loan repayments, or contributions to health savings accounts, HSAs, and flexible spending accounts, FSAs. Each of these serves a different purpose, and it's important to know what they are so you aren't caught off guard. If you ever see a deduction you don't recognize, ask your employer or HR department for clarification. Point 2. Calculate your net pay after all of these deductions. What's left is your net pay, also known as take-home pay. This is the amount that actually shows up in your bank account. Net pay is the number you should focus on when building your budget because it represents the real money you can spend, save, or invest. Many people make the mistake of planning based on their gross income, only to be shocked when they don't have as much money as they expected. Net pay gives you the clearest picture of your financial reality. Point 1. Review your pay stub regularly. The most important step in understanding your paycheck is to make reviewing your pay stub a habit. Every pay period, look at the breakdown of gross pay, deductions, benefits, and net pay. This helps you spot errors, understand where your money is going, and adjust your finances accordingly. Employers sometimes make mistakes, and taxes or benefits can change from year to year. So reviewing your pay stub keeps you informed and in control. Over time, this habit will make you more confident with your money and help you make better financial decisions. Your paycheck is more than just a number. It's a roadmap that shows how your hard work is divided between taxes, benefits, and take-home pay. By understanding gross pay, federal and state taxes, Social Security, Medicare, benefits, and net pay, you eliminate the confusion that often surrounds payday. Instead of wondering where your money went, you'll know exactly how every dollar is being used. This knowledge not only helps you budget smarter, but also gives you the confidence to make financial choices that align with your goals. Understanding your paycheck is the first step to taking control of your money. Once you know where your income is really going, you can make smarter decisions about saving, spending, and planning for the future. If this video helped clear things up, don't forget to like, comment, and subscribe for more personal finance tips. Thanks for watching, and I'll see you in the next video.